Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again on the Forex market and euro currency in particular as usual. So it seems that we were not waiting for too long when the retracement starts. So actually right on Monday we have got significant downside action, and mostly it confirms our suggestion that pullback it might be stronger, just because on Friday the sell-off also was relatively strong, and right by the Monday's evening we see that euro has dropped to 1618 to the 618 support on the hourly chart that we talked about in weekly report. So first was the confluence on the weekly report that we discussed, but we suggested that might be deeper action just because on the top on the daily chart we have engulfing pattern. So currently actually we have a bit larger engulfing combination, because if you combine two candles to the left and two candles to the right, you will see that this unique some whole larger engulfing pattern. It means that downside action is once again might be not over, so we could get a bit deeper actions here as well. So as we agreed to keep an eye on the oversold, the nearest one rate 60 level. That's probably the thing. I think that currently we could keep going with this scenario, keep going with this plan, and see what will happen around it. Besides, actually, here is deep retracement even to the 107.30. Absolutely doesn't contradict the idea of some euro strength in the nearest few months, because, well, in general, this will be just 618 pullback, and it's actually not the really big problems with that. Although from the technical point of view on the daily chart in this case and right now already, we should consider only bearish positions. If you trade on the intraday charts, you should consider bearish positions because your major trend on the daily chart turns bearish. So, but on the longer chart, on the longer time frame, perspective of the weekly chart, trend stands bullish, and any retracement here should be treated as just pullback inside of the bullish trend. So that's how just time frames work on the markets. On the lower time frame, on the 4-hour time frame chart, we have same story about harmonic swings. Also here you could see that additionally to 108.60 support on the daily chart, we have 618 support, 108.51 on the 4-hour time frame chart. It means that here we have a confluence support 108.50, 108.60, and harmonic swing of this retracement that market repeats accurately on this way up. Here was the half of the harmonic swing retracement. Here's we suggest that it probably should be, at least based on the patterns that we have, it should be a whole harmonic swing, and most probable that it will be in some case in some kind of the ABCD pattern. So here's something like this. So we have the AB leg. After the pullback, it might be some BC leg where we get the then action back to the 160 level. So currently market shows the pullback here, which is potential, as we suggest, might be the BC leg or potential ABCD pattern here. The reasons for the pullback you could see on the hourly chart. In my case, this is a 30-minute chart, but in general, hourly chart you also could see this. That's our support. It's 108.24, 618 support of the whole upper direction that we said. This will be next destination point. Market hits it. Right now it shows minor BCD pattern coming to the resistance. So it's very probable that maybe the BC leg forming is coming to final point. Yes, here we have some acceleration suggesting that it might be a bit higher. Market now is hitting the minor XOP, but that will be a really significant barrier on the way up, just because this is also confluence 109.65, 109.72 resistance, and take a look. Here's we have some kind of the price consolidations here and to the left. I would call it as a hand shoulders if it will be a bit higher, but it just was some consolidations around this level. And for the market, it will become an additional barrier. So it's just enforce the existence confidence resistance area. So that's why it's not obvious conclusion that market will break it up. So more probable, since we have here definitely acceleration, here we have the acceleration, more probable that this might become the point where market probably will stuck around it, and starting of the CD extension on the 4-hour time frame chart could start somewhere around this confidence area. So that's we see as well, most probable scenario that we have on the euro currency. In the case of the upward breakout right there, it's more probable that euro currency will just keep going higher, and it will tell us that the retracement probably is over. In this case, on the daily chart, we should be ready for another leg up. In this case, we start to consider resistance and targets from 111.73. So actually, it exists right now already. But for us, currently, it's major points where the upward action to this target will be restarted. Right now, we're considering still a bit deeper retracement, somewhere to the 108.60, 108.80 area. But here, as I said, we have to control this performance around this level, and if it will be broken up, it could mean that market is going to this target immediately, so without any additional downside extensions. So here's a few moments to keep an eye on. Let's see how the situation will develop.